Mohnish, welcome back.
Hello, Divya. How's it going?
Good. I noticed your background is the new library, so I'm very excited that you're able to use it for this interview.
All right, we aim to please.
That's great. Is that Warren Buffett and Charlie behind you?
That's Warren and Charlie
Is that
watching
Warren
the
Buffett
proceedings.
behind you right there?
That is.
Warren and Charlie.
Yeah, we had the same bust
So
maker
good.
make both the busts. We had the same bust maker make both the busts, and I sent one of those to Warren, and he was really excited to have his bust at the Berkshire headquarters.
So cool. So I guess it's been a while since we last chatted. It's funny, the last time we talked, we had discussed, among other things, Meta. And one of the things you had said was, I think when we chatted, it had crashed down from like 380 down to 220 or something like that, on its way all the way down to $90. And you had said that, it'd be an easy double from current levels, which at the time was like $200. Lo and behold, it has doubled and then some since then, but I wouldn't say it was an easy double. It definitely had its.
I think Mark did a really great 360, 180, you can say, where he really tightened up the expenses. I mean, Meta is a great platform. I think
Right.
it's got a great franchise, great platform. They had a kind of country club attitude to spending, and there wasn't that much discipline around. When you have a great business like that, you don't necessarily need to watch your pennies. And it's amazing how they turned on a dime and actually tightened up all the expenditures and the layoffs and basically got the ship pointed in the right direction. And I mean, then you had the cash flows just show up, so it was awesome to see that.
Yeah, I mean, I've written about this numerous times. They are the fastest pivoting company I think I've ever seen. I can't think of a single business that has pivoted as quickly at anywhere near this scale as often as Meta has. So I remember in the depths of bad news when the stock was it was like $88 a share. The Wall Street Journal put out a headline stating that they were going to reduce their employee base and fire I think it was 11,000 people at the time. And as soon as that happened, the stock started moving. I think that day it might have been up 8% or so. But, it took a while, I think, for people to realize that they weren't just paying lip service to cost cutting, but that there was, a fundamental change in terms of just the company being permanently leaner and a complete change in the philosophy of Mark, in terms of what sort of was possible with a smaller team. And over the months and, the years, over the last 2 years, he's kind of said on numerous occasions that, he just feels like a leaner, meaner team is better. And it's coincided with his uptake of Brazilian Jiu-Jitsu. I don't know if you've seen a lot of that, but he seems to have incorporated this idea of lean, behavior to his personal life, with some of the fighting that he's been doing. And it's starting to obviously percolate through the rest of big tech. And now people are calling for Google to do the same thing and, really kind of cut the fat. You've seen some of it in Amazon, but I mean, what's your take on which of these companies has the most kind of operational leverage within it, and also maybe as a corollary have the most room to improve from a cost standpoint?
Well, I think Amazon runs a pretty tight ship, as does Microsoft. I would say that in my different visits to Alphabet headquarters, that's definitely a country club. I would say that they've done some. I mean, I think that some of the Google employees I've spoken to, they don't feel secure in their jobs, in the sense that the layoffs have come very suddenly. They've actually gone after some very senior people in who they've cut. But I think there's a lot of fat there to be cut. I mean, that's another incredible set of franchises with search and Android and YouTube and all that. So yeah, I mean, I think that the company where top line is equal to bottom line, in effect, basically where there's no expenses to speak of, is Microsoft. Microsoft's just an incredible machine. I mean, when you see their revenues go up and 80% or something will drop to the bottom line, it's really, I think, Satya and his team, I think they've always had great execution. Even when they've been doing really well, they haven't had a lot of meat or fat on the bone, if you will. They've run lean. But yeah, I think Alphabet has a ways to go.
But by the same token, maybe that's an argument to own Alphabet. Low-hanging
Yeah,
fruit for them.
absolutely. That's right.
Yeah. I mean, they actually trade at a multiple that's more in the low 20s versus, take a Microsoft kind of mid to high 30s for,
Yes. Yeah, but there's a
um,
little bit of a difference. I mean, I think that Microsoft is such a strong recurring revenue business. The recurring nature. I think the Meta franchise is awesome, but it's at the end of the day, it's an advertising franchise. And
mhm.
on the Microsoft side, it's very critical part of enterprises. That revenue is not going anywhere. You could argue that it's higher quality.
Yeah, I've heard that argument. And I think it's more like earning stability is kind of if you're going to pay a premium multiple for it, you can argue for that.
Yeah.
I do think there's something to be said for Meta being, and I think this applies to Google and Amazon's been picking up on this as well, being kind of the distribution channel for corporate enterprise as well as small business. Like if you want to reach an audience, you got to go through like one of these channels.
Yeah, and also it used to be that, half your advertising worked and you didn't know which half, and that's gone. I mean, that was the whole adage with advertising. Like, there was so much waste. And the thing with platforms like Meta, you don't have that waste because you have such a direct relationship, what you're spending and what you're seeing come out the other end. And the ability to pinpoint that is really powerful. And I think that's a core part of what their franchise is.
Yeah. Now, one of the other things you said previously, indifference to the metaverse, or maybe skepticism towards the metaverse. Now that conversation has shifted to AI. So it's not really about the metaverse so much now as it is about AI. How do you think about that vis-a-vis the Mag 7 or kind of these, these blue chip names? Do you have a viewpoint on who's best positioned to take advantage of that?
I would say that Microsoft, has historically been a great cloner. It has not been a great innovator, but they're exceptional at cloning. Sometimes it takes them 10 versions to get it right or 15 versions to get it right, but they get it. I would definitely put them in the winner's camp just because they're so good at the execution. I mean, what I'm saying is the company has woken up to the potential for AI and they're doubling down in a big way. I would put them near the top. I would say that obviously Google has had a lot of strengths in this area for a long time, but they don't have the execution discipline and the intensity of going after it the way Microsoft does. It's a no-brainer for me that with the partnership that Microsoft has, that they've got a pole position here.
You think that Satya Nadella is on a personality level maybe a little bit more ruthless versus a Sundar Pichai? Like, what is it because you hear this in the news about how Google's kind of dropped the ball on this AI trend. I'm not sure what to make of it because I feel like they have incredible technical expertise across the board and they use AI a lot with search. But there does seem to be a personality difference between the management team at Microsoft and when I heard Sundar speak, and he's done congressional testimony. You see him at conferences and whatnot. He comes across as maybe a little bit more relaxed, but I'm just curious if you have any thoughts into that.
Quite accidentally, I didn't expect this, but quite accidentally, when I was in Omaha in May, I usually go for a dinner that Charlie would invite me to. There's a lot of who's who show up at that dinner. They seated me next to Bill Gates. So I was quite a surreal situation where I had dinner with Bill, and of course his son was sitting next to him, and I chatted about all kinds of things with him for about 2.5 hours. We talked a lot about many of these areas. And I even played a game with him. I said, look, I'm going to mention a company. You tell me if you want to go long or short, and he said, yeah, no problem. So I said, Amazon. Yeah. He said long, and I said Google. He said short. And then Apple, he paused. He said, look, basically Apple's a situation where they don't really have R&D in the way most of us would understand it. So he mentioned that Microsoft has had Microsoft Research Labs forever, right? And I also pointed out to him then that nothing has come out of Microsoft Research Labs ever, that has been that has been of any use. So he actually was quite agreeable to that, even though that statement probably didn't make him happy. He said, look, we have two kinds of research at Microsoft. We have the ivory tower, Microsoft Labs, which is like a, academic bunch of PhDs, whatever, doing their thing, and you have your opinion on that, that's fine. And then we have, of course, development and then R&D tied to development. And he said that has been really effective. So that's the engine which has the more, bread and butter engineers who are the masters of cloning, right? So basically, Google has always had a huge leg up on the pure research for a very long time, and they've done a really good job. The transition from the real research, from this very innovative research into a business, is not something Google has been able to pull off too many times. They pulled it off for search, but then after that, if you look at it, YouTube was an acquisition, Android was an acquisition, and many of their other bets are just wild. Like there's like a free for all spending, but nothing has really come out the other end. Microsoft, on the other hand, doesn't take flyers. You know, when they see that something is gaining traction, and they may put some people on Microsoft research into it, but I don't think Bill and company and Satya and company count on those guys. They pull in people who are more, dyed in the wool development engineers with some research background, and those are the guys who pull the teams and things through. So I think that from an execution point of view, I just think that it's just a lean, mean fighting machine. It's really exceptional. And they will be able to do this, and they've done this repeatedly when the paradigm has changed. The paradigm has changed on them so many times. If you think of Microsoft, it's like nearly a 50-year-old company. I mean, I think this year is like year 50 for them. 48, sorry, they're 48 years old now. It's like really old. But for a 48-year-old business with all the paradigms they've jumped through, they look like a young company. They look like a really young executing company. It's just got some great DNA on that front.
Yeah, they're not resting on laurels. Actually, on a related note, and this transitions to some of your other investments. Somebody asked on the topic of top line revenue increases going straight to the bottom line. The Almaty Airport in Kazakhstan of your Turkish holding TAV Airport seems primed for duty free, as well as potential air and passenger fee increases that may go straight to the bottom line. There's a Pavlovian response to macroeconomic news. How do you think about their TAV's valuation lately? Do you ever double down on bets that are 10%? You obviously make large bets, so have you doubled down there, or what's your take on that?
Yeah, let me just give you some background, I think, so that people can kind of understand the business a little better. The Almaty Airport was an acquisition that TAV did in the middle of COVID when passenger traffic was zero. It was like basically you're buying this airport when your revenue is zero, basically. They got the deal of the century in terms of what they paid. Most of these airports that come up for privatization are BOTs. They build, operate, and transfer, which means you get a concession for like 25 years or 30 years or 50 years, and you pay the government something for that concession. And after that 25-year period, it goes back to the government. And so you are a tenant, if you will, milking the situation for 2 or 3 decades or something. TAV, the Almaty Airport, was an outright purchase. They own it forever. They own it for the next 1,000 years. They don't have to pay anyone anything anymore. And part of the deal for them to get that airport was that they wanted to put in a new international terminal, which is going to actually go live in about 6 or 8 months. They've been building it. I visited that airport in 22. And the Almaty Airport is a very unusual airport in the sense that I don't know of any other airport in the world where inside the airport, some of the real estate was sold. So for example, the current duty-free operators in the current terminal own that space inside the terminal, even though TAV owns the airport. And TAV today at that airport gets zero duty-free revenue. Now, what TAV is doing is it went and talked to those guys saying, hey, listen, can we do a deal? And the price was so high, they said, okay, you keep the duty-free. It's okay. When the new terminal comes up, which is happening in 8 months, all the international moves to the new terminal, and all the duty-free automatically goes to the new terminal, which means that TAV will now own 100% of the duty-free. And the people who had those duty-free shops in the old terminal, which will become a domestic terminal, can basically go pound sand. They'll convert them probably to coffee shops or something. So it's like there's nothing. And
Yeah.
and just to tell you, just to show you how duty free works, just in case of some of your listeners are duty free aficionados. When you go to some, duty free shop and there's a $100 bottle of Johnny Walker or Chivas or something, the factory gate price of that liquor is 25 to $30. Okay, so what you're paying $100 for, which would cost even more in your home country, the factory gate price is 25 to $30. The airport operator charges 40% of top line as their rent to the duty free operator. So TAV has its own subsidiary which runs the duty free shop. So what TAV will do is it'll bring in its own subsidiary as a tenant. That tenant is 50% owned by TAV. So 40% of all the duty free revenue will come to TAV as rent. That Johnny Walker bottle, $60 is left for the duty free operator who pays about $30 for it, 25 or $30. They have 10 or $20 in expenses to run the place and they make a 10% margin. The airport operator, the duty free part of the business, is an incredible business. Every flight, every international flight that comes in, on average, about $1,500 gets spent amongst all those passengers on duty free. And the airport operator ends up with about $600 per flight as their fee, which if you divide it by, let's say, 100 passengers or something, it's like $6 per passenger. The terminal fees, which is also what they charge for international, which normally is about $7 or $8 or $9 per passenger. Currently in Kazakhstan, that number in Almaty is like $3 or $4. That is being bumped up about 20% a year by TAV. They're not taking it to 8 in one shot, but it's going up. So basically, if you think about the per passenger revenue, the international per passenger revenue, which TAV is going to get when the new terminal is up, it'll be like something like $6 per passenger from duty free and probably another $5 or $6 from the passenger fees, which used to be three. So what used to be $3 per passenger will soon be $11, on its way to about $15. The other thing that has happened is that the traffic at Almaty, the passenger counts, they just actually today released some numbers. The 2024 passenger count and aircraft movement numbers are about 40% higher, 30 or 40% higher than 2019, which was the last year pre-COVID when things were normal. So they are basically getting an airport in 24, which is 30, 40% larger in size in terms of passenger throughput and aircraft movement. Almaty is also one of the only airports where TAV does the fueling. They don't have the fueling rights at the other airports. It's very unusual for the airport operator to do the fueling. It's like you have a monopoly gas station for like 500 miles, and that fueling business has like a 40% margin. It's beautiful. Okay. and all these flights from Russia got
Wow.
diverted and whatever. So the long and short of it is that TAV, the entire company, used to have a market cap which was like 600 to 800 million US dollars. Just the Almaty airport is probably, if they wanted to put it on sale in a few years, would go for, I don't know, 3 to 5 billion. And they have 15 other airports besides Almaty. So we are long
Wow.
and strong with no plans to lighten up.
That and the current market cap is 600 million.
Market cap used to be 600. It's moved up. It's approaching about 2 billion now, but it's still very low. It's very low for the size and scale. And Turkey just dropped all visa requirements for US citizens. Their tourism business is through the roof. 2024
Wow.
numbers are looking like about 30% higher than 23. All their Turkish airports are on fire. I mean, they're just doing exceptionally well.
Yeah.
And all their international passenger revenues are very high. So company is executing really well, firing on all cylinders. It's a very good management team. Yeah, basically that Almaty airport that they bought for 400 million, including the capex, which was two-thirds finance at like 4%, 30-year fixed, was just an incredible deal.
What percent of your total portfolio is Turkey now, roughly?
It's I think probably more than half. It's not more than half because I put money into it. It's more than half because it's Reysas used to be 16 million market cap, and it's about 30 times that now and such. So it's moved up. I haven't checked lately because some of our US bets have done very well as well, but like 50-60% probably at this point, but still very undervalued.
Speaking of your US bets, what's your favorite US name now in the portfolio?
If you looked at, I mean, I don't like to talk about what we own so much, but if you looked at our last 13F filing, which is only our that only shows our US positions, it only had coal. So basically we had some coal bets that showed up on that filing, and we'll have another filing that'll show up in another week or something for our year-end numbers.
Yeah.
But yeah, we had a pretty extreme mispricing on the coal front. And a lot of things were misunderstood about it. So we went into that. So basically metallurgical coal, which is what is used to make iron and steel, we will be using that 50, 60 years from now because there's really no substitute. And those stocks were trading at like 2 times earnings. They were doing massive buybacks and so on at 2 times earnings. Doing buybacks at 2 or 3 or 4 times earnings is really good for your health and your wealth.
Wow. How was that something where you knew about the coal industry from the past, or how did that hit your radar in the first place?
I don't have any original ideas, Divya. Everything is cloned from somewhere, like my buddy Bill Gates. He also has no original ideas. We're very similar that way. I'd seen a filing by David Einhorn where his largest position, this was in first quarter of last year. So that filing came out middle of May 15th or something. And his largest position was a company called Consol Energy, which is a big thermal coal producer. I just basically wanted to answer one question for myself. I said, why is David Einhorn so hot and heavy on stupid coal? And so I went down a rabbit hole to try to answer that question. And I emerged from that rabbit hole, massive coal bet, because it was just such a no-brainer. And one of the things about coal is that, I don't have any endowment money or anything in my fund. But if I had some of those guys in the fund, they would have exited because of all the ESG mandates. And so we have a lot of irrational kind of behavior in terms of what people can and cannot invest in, which leads to mispricing of some of these securities.
That makes a lot of sense. Did you talk to David Einhorn at all?
I didn't speak to him. I just basically went in and just said, okay, let's try to understand what is going on. And I'd seen some commentary he had made. His complaint was that these companies that he's buying that are really cheap from a valuation perspective, because of all the, emphasis on the big seven tech, etc., they are kind of left by the wayside, right? Nobody's really interested in these companies. And he was kind of moaning and groaning in some of these public comments of, well, how do I get paid? How do I get paid when I own these names when no one's interested? The answer was you get paid when they buy back stock, valuations are very low. And Consol is an interesting company because they forward sell all their production at least a year in advance. So we already know, for example, in 2024, even though it's a commodity, we already know within a band what their cash flows in 24 are going to be because they've already sold it. They've already said what the prices are. We already know what their costs are. And that's a business which says that 100% of discretionary cash flow, they cancel the dividend is going to buybacks. So we had a company that had a 1.8 billion market cap last year, that north of 600 million in earnings last year, pumped into buybacks. So that's very potent.
Are you still involved with or invested in India Energy Exchange? Are you still in that one? Or
I think what I'm finding is that we're finding more things that make a lot of sense in the US and in places like Turkey. India is a company with some great tailwinds, but also it's not a cheap place. We have some great businesses and great franchises there, but some of the valuations are pretty heady. So we've been net sellers in India and net buyers in the US. When you look at something like TAV Airports and you look at something like Almaty, that's a big aha moment because you look at an airport like that and look at what kind of cash flow that asset can produce. And you look at the pricing of that asset, it just doesn't make any sense. When I see these big price and value deltas, for reasons that I can understand. Like in that case, there was, the whole issue was Turkey and, who wants to buy an airport in Kazakhstan and all these other things that going through people's minds. I think when you get to those anomalies, then you have a basis to do something. So I think metallurgical coal is an anomaly in terms of where it's priced and what it's worth. I think the large car dealerships are an anomaly about where they're priced and what they're worth. And I think Turkey's an anomaly like that, right? So I'm basically Mohnish Anomaly Pabrai. That's who I am.
Do you feel the same about the auto OEMs? So like the GM, Ford, like companies that have not, gotten the EV credit in the way Tesla has and are still selling, or like a Toyota.
I think the OEMs are a really bad business. And the reason they're bad business is that if Tesla makes a 10% margin, so in the end, we will all be driving EVs. And that transition may happen in 10 years or 20 years or whatever. You can debate that, but that transition is going to happen. Whenever that transition happens en masse, if the margins of a company like Tesla are like 10%, then the margins for a company like Ford and GM will be negative because the execution here is so much better. So I think that most of these players go up against Tesla, except companies like BYD, maybe the Koreans, will have a very hard time making any kind of profit margin. So I would not be surprised if in the end, the Fords and GMs of the world really have a tough time. They may even become terminal because, if you have a negative margin and the ICE cars are gone, that's a really tough place to be. And I think when you have Elon, who is an anomaly, when you have someone like Elon that you're competing with, the only thing you should do is go find something else to do. It's not good for your health or wealth to compete with Elon. And then, we have Changfu Wang at BYD in China. Changfu Wang is Elon to the power of Elon. When you have to compete with Elon and Elon squared or Elon to the power of Elon, you definitely want to take your ball and go home. Go find something else to do. So yeah, the auto OEMs, I think long run, they have some difficult times ahead.
Now on Turkey, we didn't get to discuss Reysas. Any change in your views on the company, or it's still just one of these long-term kind of stories that you plan on sitting on for many years to come?
My view of the people who are running Reysas and the quality and nature of the business. I've been a shareholder now for almost 5 years, made the bet in 2019, and we haven't made any changes. We would like to hold that for as long as we can. My perspective on the business, the quality of the assets, the quality of the people running it, how good they are, has only gone up every year. I think it's an exceptional set of assets, really smart capital allocators. I have never seen them in the last 5 years make a single mistake. I just haven't seen them do anything dumb. And the other thing which is really great about Turkey is that we had these very crazy monetary policies coming out of Erdogan's government, etc. But after he got reelected, he put a new team in place. And that new team is really an exceptional team. And they basically have raised interest rates. Interest rates now in Turkey are in the mid 40s. And they are taking a sledgehammer to inflation the way they should have. And so probably in another year or two, they're already starting to see some green shoots on that front in terms of inflation is really hard to get back under control once it gets wild and crazy, but they're going at it pretty aggressively. So I think the policies they have in place are working quite well. So Turkey may actually, all these investments in Turkey I had made was assuming that the macro never improves. The bets worked because even like, for example, TAV Airport is listed in Turkey, but Kazakhstan, Almaty, has nothing to do with Turkish monetary policy. It's just the baby got thrown out with the bathwater, if you will. So I think that there may be some real tailwinds because at some point it looks like in the next year or two, the actual monetary situation will be a lot better. And if we ever get people coming back to Turkey, the foreign investors and institutional investors, then some of these names, these are the most blue chip names. These are the ones that people will want to own. But we don't need that to happen. It would still work even without that. I think that the good news with Turkey was that we could, because it was so cheap, we went after the very best assets. And these are kind of iconic monopoly type assets Like, we own the Coke bottler, we own the largest beer company, we own the best airport operator in the region, and we own very prime warehouse assets all across Turkey. So these are just great assets.
Have you, speaking of kind of hard assets, have you looked at all into like the real estate industry in the US, commercial real estate, where there's been a lot of, a lot of turmoil, anything in that space where you feel like there's maybe been a potential dislocation, that'll
Well, I think
allow for.
you have to segment it. I think the office vacancies, I think what the number that I read is something like 20%. 20% is a ridiculously high number. We didn't see that during the financial crisis. We haven't seen those types of vacancy rates in offices in the US for more than 3 decades. You have to go really far back to get that. So it's nuclear winter in the office market in the US. We are seeing some signs of some real distress in some of the banks, smaller banks, who were wild and crazy lending to these people. Like I think New York Community Bank Corp, the stock's been under pressure. I haven't looked at it, but I think that the exposures, because what happens at some point is the landlords just, hand you the keys and move on, and then the bank is left high and dry. They can't sell it, they can't do anything. So we went through a big crisis a few decades ago where they formed Resolution Trust Corporation to try to move some of these commercial assets, and get them basically kind of like a Chapter 11 process, if you will. So I think office, my suggestion and perspective is to just stay away. It will take a long time because we had a secular change in how people work. It will take a long time. I mean, the US population, the growth rates are really low. So we used to, as a country, because immigration is not solved and all of this thing, if the country was growing at something like 1% a year, which it used to do, then eventually this space would get chewed up and we would get back to some kind of normal situation. I don't know if even 5 years or 10 years from now, whether the office market, it'll definitely be less, the vacancy rate will go down, but it may still not be healthy. So I think that's a nuclear winter for a long time. If you look at some other areas, like I would say like home builders, I think that's a much more promising area to look at, because what has happened with the home builders is that many of them are getting religion like NVR. NVR was the poster child which did so many buybacks, and the stock went from, I don't know, $10 to 4,000 over the last 30 years or something. And many of the others, like Pulte and some of the other guys, are following that playbook now. I think home building is a much better area. I haven't made any bets there yet, but basically, they don't really have an overhang. We're likely to see interest rates come down, and we don't have a lot of housing stock and such. So that once we see interest rates go down, the home building industry maybe be doing even better than it is today. I think in the office market in the US, you kind of have to avoid some of the office stuff. You kind of go more residential and then kind of take it from there. But it's not a sector I'm playing in right now.
Shifting gears a little bit, do you have any views on the upcoming presidential election in terms of how that might affect your portfolio or kind of sectors you might be looking at?
I wish I had better choices. I think the range of
It's usually a
candidates for
primary thing.
no the I mean, I would just say that we are the leaders of the free world. We are the carrying the torch of democracy, and I mean, I love the United States. One of the most amazing thing about the United States and the founding fathers and the kind of form of government they set up is it's basically bulletproof. And you see that just the craziness that goes on in Washington, and the economy still does well and everything's still going, running and working. It's thanks to the founding fathers. But I think it's a sad state of affairs in Congress. It's a very sad state of affairs with the candidates on both sides. And I wish there were better choices. It's just, I mean, the US is doing so well with, just morass and complete deadlock in Washington. Just imagine what we could do if we actually had somewhat half functional government. It would just be night and day.
So on a related note, we were talking to the Winklevoss brothers earlier today, and they were complaining about the fiscal situation in the United States, and I was saying that we've been talking about debt for decades, and when will we come to a point where the government will actually have to grow up and rein in costs? Do you have any thoughts on that? I mean, do you feel like we can continue to amass deficits year after year at the scale that we are without any repercussions? And how do you put a duration on how long it can last?
Well, it's a much bigger problem at higher interest rates that we have now. And I think that it's not good for a civilization to test the limits. The US has a pristine credit. We are borrowing in our own currency. We're never going to have a default because we own the printing press. But I think that it could cause issues. I think it makes the monetary policies a lot harder. It makes it more likely that we have runaway inflation. So yeah, I think that a small deficit is probably okay. But I think that there needs to be some structural changes in the way we, do our taxes and all of that. And that requires Washington to be functional. And it's not functional. So it's an unfortunate sort of situation. But yeah, I'm not an alarmist about it. I think that country has a lot of strengths, but I think we definitely need some grown-ups in DC.
There seem to be more politicians being, kind of talking vocally about the deficit problem, but it's an ongoing, it's just been talked about for so many years that you just wonder, like, what will be the turning point where the parties actually agree to make substantive changes, be it to entitlements or tax reform, whatever it is, or immigration even. And it just blows my mind that nothing ever happens as the problem gets bigger and bigger. But anyway, be it as it may. Lastly, Mohnish, you've written extensively about Charlie Munger, and obviously with his passing, we wanted to I don't know if you could tell a story about a time, dinner, or moment you shared with him, but just if you could give us maybe even an iota of like what he meant to you, and also, some of the wisdom that he imparted on you. I'd love to hear it. I'm sure the rest of us would as well.
I miss Charlie a lot. I used to see him a few times a year for dinner. We'd play bridge. And in fact, I had my last one-on-one dinner with him exactly a month before he passed away, which I didn't know at that time it would be my last time seeing him. And we had a great time, actually. His mind was very sharp, and he was always very kind. He was always very funny. Charlie always had the best jokes. He just had a huge repertoire of jokes that he would, say on demand. I always have a hard time remembering great jokes, but he was really good at it. I remember one time a few years back, we used to meet on Fridays at the LA Country Club to play bridge. And we used to start by having lunch in the dining room, and then we'd go play 4 or 5 hours of bridge. So I was sitting in the LA Country Club dining room, and across from me was Rick Gurin and Charlie Munger, just sitting across the table from me. And I told them, I said, you guys think this is just okay, there's a bunch of people having lunch before bridge, but I'm sitting with two, historic icons. And, this is like a surreal moment. There's an Indian guy, grew up in Bandra in Mumbai, sitting with you guys, just shooting the breeze. So I said, when you guys were doing your deals in the 60s, where you say you were shooting fish in a barrel with the water drained out, what are tell me about some of the deals that stand out. They looked at each other, and then Rick Gurin tells Charlie, tell him the story of the nurse. Okay. And so Charlie goes on to say that there was a company in California where this maverick entrepreneur had come up with an auto additive that would go into an engine, where if you put this kind of liquid in the engine, it would seal all small leaks. Like, it would make the engine not leak anymore. And this guy basically was like a super salesman. So what he used to do is he used to go to these auto mechanic shops and whatever, and he'd take his gun with him and he'd shoot the gun into his engine block of his car. And then he would pour the liquid into the engine block and show the mechanics that, look, there's no leak. And, his sales took off. Like people like, this no brainer, right? But the guy was kind of maverick and not a very good manager of cash flows and all that. He suddenly passed away, kind of untimely death. And the business owed a lot of money to the banks. And basically, the business was, for the most part, bankrupt. And so what Rick and Charlie did is they bought up all the bank debt, like 30, 40 cents on the dollar. And they had control of the company, but the widow of the guy technically had the ownership of that company. And they did not want to play hardball by saying, hey, we own the debt and that's the end. They wanted to make some small payment to the widow to basically get a proper sale from her. So Charlie said that when the guy passed away, the widow finds out that the guy was having an affair with a nurse. He had basically, in his will, made the nurse the executor of his will, and the widow was going to get the title to the business, but the nurse was the executor. So the widow was extremely pissed off. Okay. And the nurse was also extremely pissed off. They were both pissed off with each other. And Charlie and Rick, in the middle of all this, they just trying to get their kind of deal done, but the women basically were not interested in cooperating. So Charlie said, okay, I'm going to meet them and, try to kind of pacify them and say, yeah, we know he was a jerk and whatever to the widow and get it done. So he arranged a meeting with the nurse at the California Club. The California Club is a club in downtown LA. That's the first place I met Charlie. When I first met him, he used to love going to have lunch there. It's a very, blue blood, old money kind of place. And Charlie always had the same table in the dining room. He'd probably eat lunch 3 times a week over there. And the nurse was blonde and well endowed. I will not use the language Charlie used on this video, but let's just say it was a lot of colorful language he used. And she showed up for lunch with Charlie in her nurse's uniform because she came straight from work. And the uniform was about 3 sizes too small. Okay. And so so Charlie's saying that all the members of the California Club who were sitting having lunch there, they like gasped, when they saw this woman enter and then sit down with Charlie. And Charlie said they thought I'm having lunch with some porn star. Okay. And so he said, anyway, I met her for lunch. I pacified her. Then Rick and I met the widow. We pacified her just enough for the 2 women to cooperate, get the deal done, and then we moved on with that additives company. This would be kind of like the stories I'd hear from them. I think just we would not have a Berkshire Hathaway as we know it today if there was no Charlie Munger. I don't think the market cap of Berkshire Hathaway would be even 10% of where it is today without a Charlie. The impact, it was really 1 + 1 became 11. He pushed Warren towards the better businesses, the better people, and all of that. And he pushed him in a way where he never took credit, and like he was always happy to be the partner in the background, whatever. So I think he had an enormous impact on Berkshire. He had a huge impact on a lot of institutions that he got involved with, the Harvard Westlake School and then UCSB and Stanford and University of Michigan and so on. Just never really wanted to talk about it. Just all these great things he was doing. And couple of times, I brought up personal challenges I was facing. And he was just so helpful to me. I mean, just always there and just incredible advice. And I just always followed what he said and things worked really well. But another time I'd give you one of the Munger jokes, he was saying that there was this Jewish couple and they had this kid who really didn't like to study much. His kind of grades were like pretty poor, even though the parents were pretty smart. And the parents were kind of frustrated. So they found there was a really good Catholic school in the area. And they moved the kid to the Catholic school. And after the move to the Catholic school, the kid suddenly started doing extremely well in school. In fact, the kid used to come home, drop his bags and stuff, and just go to his room and start working. And math was especially hard subject in the sense that the kid had no interest in math. His math grades used to be the lowest. He had some of the best math grades. So after a few weeks, the parents sat down with the kid and they said, we noticed that, you're doing so well. You're engaged with all the math and everything. So what changed? Like, do you like the school? He said, when I went to the school and I saw that they had put that guy on the plus sign, and I just knew that they were really, really serious about math. And he basically said that I didn't want to be crucified. And so I just decided I'm going to focus on the math.
Mohnish, you're one of the best storytellers in the industry. So we're getting a compounding effect here between you and Charlie, which is
Well, I
awesome
had
to
to take
see.
out all of Charlie's colorful language, which was
Yeah,
quite
I can
something.
fill that in. I'm sure we can all fill that in. Yeah, it's funny because it's funny you say that he's happy to be kind of in the backdrop, not necessarily the foreground of Berkshire Hathaway, but every time he talks, you can tell he isn't holding back. I mean, I've
Well,
seen
I,
so
I
many of
actually
his
asked Charlie, I asked Charlie
interviews.
what I said. I told Charlie, in all your partnerships with all the different businesses that you're in, you are the dominant partner. You are the type A main partner, and the other guy is, subservient to you in some ways. The only one which is not that way is the Berkshire Hathaway partnership with Warren Buffett. So I said, how could you, knowing the personality you are, how could you accept the role of a junior partner? Because you've never been a junior partner in any of the other ventures with any of the other guys that I've met, right? He said it was a no-brainer to be a junior partner to Warren Buffett. Some things are total no-brainers. That was a no-brainer. So he said, yes, even though it
Fascinating.
went against my natural grain, I just knew that that was the right thing to do.
Yeah, it's like he joined the major leagues or something, like a major league baseball team, and or something to that effect. That's amazing. Monish, this was phenomenal. Always such a pleasure to have you chat on SumZero and tell us all your learnings. Yeah, amazing. I'll follow up with you after this. But thank you again, and thanks to everyone else on the call for tuning in. We'll certainly be back next year for Top Stocks 2025. But quick plug for Mohnish, even though I know he can't talk about it. Check out the Wagon Mutual Fund when you all get a chance. Braden, do you have anything else you want to add before we close it up?
No, nothing else. Everyone that joined us today, obviously we appreciate. We hope you had fun and found it as informative as we did. And Mohnish, thank you as always. It's always fun. Always fun hearing from you and getting to hear a little bit about Charlie and your time with Bill Gates too. Telling me nothing's coming out of Microsoft is it's quite a line.
We should do a call about conversations at the LA Country Club. That could be a good hour long or longer discussion.
Yeah, there was a lot of fun times. I really miss Charlie. It was just surreal. Never expected that, but it was a lot of fun. One thing I found about Charlie,
Absolutely.
which was really so different about, just quickly to tell you, is that he was so careful in life. He would never take risk. He would want these no-brainer bets, etc. I noticed that when he played bridge, he was more of a gambler. It took me some time to figure out. Once I figured that out, then I would trap him because I knew that he'd kind of overbid and kind of overplay his hand. And I told him, I said, Charlie, you can't get away with this because I know what you do, and I can call you on it. And so it used to be a lot of fun to play bridge with him. Anyway, I enjoyed
Awesome.
it, and thank you guys. We'll see you. Bye.